some big news that's coming on your screen, and of course it will definitely perhaps, stock will be in focus. Vijay Shekhar Sharma of Paytm will acquire 10.3% stake in Paytm from Antfin Netherlands Holding BV. So that's a big news that has come in. And you pull up a chart, of Paytm in the last 1 month, the stock has not done much. It's down almost about 10-odd%. But
yeah, I mean,
it's big news. It's massive news.
Yeah. I mean,
the stake will rise to almost 20%, I think, now after acquiring
this is going to be a very, very big deal because 10% at current prices will be nearly 5,000 crore rupees. The market capitalization of the company is closer around 50,000 crore rupees, and this was the overhang that the PE will come over there and sell. Now, Vijay Shekhar Sharma is saying, I'm going to put in the money, I'm going to buy that 10% stake on. So this is massive news. Last, recorded number that I have, he held closer on 9% stake, so in all probability that will go closer to around 20%. Coming in there, showing some faith, the street will read this positively. We'll have to find out further details on this. But the first look at this is big, big news out there. And, Vijay Shekhar Sharma going in there and saying, I'm going to go ahead and pick up this 10%, 5,000 crores at current prices. We'll have to see how the deal shapes up.
And, there is this expression of confidence in the press release as well. I mean, he speaks about how he's quite proud of Paytm's role as a true champion of Made in India financial innovation, achievements in revolutionizing mobile payments and contribution to the formal financial services inclusion in the country, etc. So he also speaks about how after this transaction, there will be no change in the management or the control of Paytm, since Mr. Sharma will continue as the managing director and the CEO, and the existing board would continue as is. Paytm continues to remain a professionally managed company with no identifiable promoter. There's no nominee of Antfin on the board of Paytm either, but big, big news coming through. I mean, it's already had a fair share of rally, right? This year, the stock is up 50%.
This is what you call value investing, right? They did the IPO at a valuation of $20 billion, right? And now they're coming back and buying the stake at $6 billion. So this is...
At a third.
At a third. So that is, smart capital allocation. But this is positive.
And also a vote of confidence, right, in the business.
No, absolutely. Yeah. That is the case, and I think I'm sure the market will read it likewise. And I hope we'll have the opportunity to speak with Mr. Vijay Shekhar Sharma as well, because this is important news flow which is coming on. We'll try and reach out to him. Mr. Khanna, thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC.
All right.
TV18.
Also, just a couple of more details, right? Based on the closing price on August 4, the value of this 10.3% stake amounts to $628 million. So that's the value of the stake that Vijay Shekhar Sharma is buying. In fact, Prakash Diwan is with us, so let's get him on board. Prakash, this is a huge show of confidence from the promoter coming in and straight. I mean, it's not a small amount, right? Almost $650 million pumped in by the promoter. What do you do if you're a shareholder at this 800 rupee price? What's your view?
Good morning, Sonia. So I think the answer lies in your question. If the promoter is putting in money and endorsing the future at this price, I don't see any reason why a shareholder would need to kind of doubt it. And it's also important that you look at it in the context of the fact that Ant Financial probably were looking at an exit. It would have been significantly it would have impaired the stock had it been kind of put out and then there were no takers. But the promoter himself buying is definitely very positive. Apart from that, the business prospects of the company itself have, kind of metamorphosed into a much larger multiple revenue stream aggregating into profitability. So the road to profitability is something which probably is more evident than ever before. And this if you trace back to the Davos interview that Shireen had with Mr. Sharma, I think the vote of confidence stemmed from there. I mean, it started from there. You could, see the kind of changes that have happened in the business and the way the management is, approached that. So I think it's definitely going to be very positive for people to see it come back in the record.
Okay. All right. No, absolutely. Prakash, good morning. Great to have you with us here as always. There was a bit of, I don't think it's a flip-flop, but the tablet ban news, right, which came through, and Dixon was up 15% on the back of it on Thursday and Friday. I think the government's given some more breathing time, right? I think it was going into effect immediately. Now I think it goes into effect starting October. For companies like Dixon, etc., from a stock perspective, what does it mean? Any additional thoughts?
Good morning, Prashant. So, in the first place, this is something which has been on the cards for quite some time. I mean, the government had introduced a PLI scheme for laptops, which really didn't see much of a response. They kind of extended the validity, the period of validity, and then this is something like a very clear signal that we are very serious about this particular aspect. And remember, electronics is the third largest import constituent in terms of billings after crude and gold. So this is an area which is of concern, and they would want to do it from a stock market perspective. There are not many companies that are yet in the ecosystem, but what it does is it sets the ball rolling in terms of a lot of larger players coming into the country and starting to develop that ecosystem. So the likes of Dixon and all would probably be part of the ecosystem, but I don't think it's going to move the needle too much for them, even once the implementation starts. So it's going to be a while, but you'll probably see the development of a huge vendor ecosystem that will see a lot of companies participate. But we'll have to wait and watch for that after the big announcements from who are the larger players who come into India to start manufacturing domestically. So that's going to be the key trigger for the industry rather than these moves right now.
All right. Hi, Prakash. Morning. What do you make of the PSU numbers? I mean, SBI was a little bit disappointing. Now, over the weekend, you have Bank of Baroda as well. That was a little bit disappointing. I mean, you had compression on the NIMs. How do you approach them?
Good morning, Nigel. So, even when the SBI numbers came through, I was of the view that, everything that is soft about the numbers, whether it was, a bit of the NI compression or whether it was, the NPA incremental change, all of that is attributable to certain factors, which are probably, one-off or seasonal or whatever you want to call it. And the interview with the management very clearly tells you that it's just going to be a phase that every bank is going to go through. And once that is done, the kind of robust, balance sheet strength that they have, the opportunity that they're sitting on, I don't see any reason why, the stock at lower levels doesn't become attractive. So I'm from the camp that believes that some of these PSU banks offer you great secular long-term opportunities, which you can't kind of, equate or measure with on a Q-on-Q basis. But it's more long-term. But BOB, of course, had some issues related to CASA and, a little bit of softness. I think that also could change. But I'm of the belief that the likes of SBI will do far better than some of the other PSU banks, given its size, given its footprint. There's no reason to get alarmed. And then that drop that we saw on Friday will probably reverse very quickly once things look up in the market, on an aggregate basis also.